I always wanted a lot of money. It's something, it just killed me that I didn't have it. And I hated the feeling of being broke. I hated the feeling of having to look at the price on the menu. Like that was the number one goal for me was I just want to go to a nice dinner and not have to look at the price on the menu.
What's the lesson that you've gained from losing money investing?
The biggest thing now is the person. It's the people. It's not even the investment. The most dangerous thing is the water. Because when those chemicals come into your house and they go through the hot water heater, it turns your shower into a gas chamber of chemicals. You have to be wealthy inside before you're ever going to be wealthy monetarily.
Hey guys, it's Caleb Williams with BetterWealth. It is interesting to me.
First off, debt is a function of your assets.
Hey Justin, welcome to the BetterWealth show.
Happy to be here.
We connected actually on Instagram, which is becoming a more and more popular platform for me to connect with great people. You've done some pretty credible things. You're into health. You sold your health company, at least on Google, it says for $35 million. I don't know if that's true or not, but congratulations on that. You understand real estate very well, but you don't invest in real estate for the cash flow like a lot of people preach. You do that more for the tax strategy. And I know that you're just a big time investor, business owner, and it's always a pleasure to have people that are making moves on the show.
Love it. Yeah. I mean, giving back, doing stuff like this where we can try and accelerate people's growth curves. I mean, that's what it's all about. A lot of people did that for me. So happy to give back.
So before we jump into health hacking and real estate hacking, why don't you give like a 3 to 5 minute just backstory on like who you are, why you're even on the show, why you get excited to talk about real estate and health. But I just find that the backstory can be very helpful as a foundation.
Yeah. I mean, it depends how far we want to go back. I mean, we could start, as a kid, playing sports. I was a hockey player, and I feel like sports is a vital thing for people when they're young. It kind of develops the disciplines that are going to carry over to real life. So that was huge for me, getting beat up on the ice rink and dealing with really aggressive, tough coaches, kind of built the thick skin. And then, watching my dad being an entrepreneur growing up, seeing all the ups and downs of that, how great it is when things are good and how destructively terrible things can be when they're not going well. So kind of going through that, it's an acceleration process for when you get in the real world. If you grew up in a traditional household, you don't really have those ups and downs experiences. And then when you get into entrepreneurship, you got to take those head on, and you've never experienced it before. So that was interesting growing up, seeing my dad make millions and millions of dollars and then have some investment failures, losing millions of dollars. That's an incredible thing to watch as a child. So got to go through that. I went to college and just wanted to play hockey. I was a music major, could not figure out at all what I wanted to do with my life. And, 5 years later, I still hadn't graduated, still just completely lost in that vehicle. And, you just feel like you're forced into that, like you had to do it. And it took me a while to realize that it just wasn't going to be the path for me. So
at the time, did you want to be like a music instructor, or did you want to perform?
I was never looking at it as a practical avenue for life. I was in the recording studio, and instead of doing my work, I was finding the rappers on campus and charging them by the hour to be in the studio. So I was always like in this entrepreneurial, like wanted to make money. And to me, like schoolwork, there was no incentive. Like grades don't pay bills. So I just couldn't get behind it. And, I always wanted a lot of money. It was something, it just killed me that I didn't have it. And I hated the feeling of being broke. I hated the feeling of having to look at the price on the menu. Like that was the number one goal for me was I just want to go to a nice dinner and not have to look at the price on the menu. Simple things like that. And that's kind of what drove me in the beginning. So I got into 100% commission sales. That's where it started for me in the summer between my 4th and 5th year of college. And, you get those first time you make a couple $1,000 in a week. And, what am I going to go be a music teacher? At that point, I'm like, okay, I'm going to make 30 grand a year. And I literally now I'm on pace to make like 50, and I'm just doing some direct sales. So that's when I knew that I needed to drop out and just go all in on 100% commission sales. So that's kind of how it rolled.
And then from there, was it like a network marketing company, or were you what were you selling?
Yeah, so it was a company that my dad had started. It was called Heartland Home Foods. Small little food service at that point. There was only a couple sales guys, and I started at the absolute bottom there. When I was in college, I was doing deliveries, working in the warehouse, and then I jumped into the sales arena. Same commission schedule as everybody else. No special treatment or anything just because your family. Actually, it kind of makes it worse because everybody thinks you got special treatment, so you got to perform that much more. And that's exactly what I did. So fast forward 10 years later, I set all the sales records, not just in the company, but in our industry. Sales in a month, sales in a year, all that stuff. And started building teams, and we grew the company to over 10 million in annual sales. And at that point, when we sold it, we had done 87 million in sales. And that's when I moved on to being a full-time investor and managing partner now with Kerns Capital.
That's amazing. So Kerns Capital, is that a fund that invests in real estate primarily, or what exactly do you guys invest in?
So we don't actually invest in any real estate at all. That's not what we do with the fund. Personally, as an investor, while we were building that food company, I knew real estate was the foundation of wealth. It's slow money, it's long money, but it's extremely safe and stable money. So I knew I wanted that to be the foundation for me. And I started investing. The first thing I did was buy a condo, right? Buy a single unit and then move out into a townhouse and rent the other unit. And then I stumbled upon multifamily real estate and just diving into that. I was like, I'm going to go do that. And after all the due diligence, reading a ton of books, I realized that my skill set is not being an operator. It's not project management, all these things that go into a big multifamily syndication. So I just started investing as a limited partner, as an LP, started stacking up all over the country. So now I'm a passive investor on over 1,600 units in 5 states, and that's completely separate from Kerns Capital. So what I did going into this real estate is I was doing it for the cash flow, like everybody else, right? I didn't want to just save traditionally to build up a nest egg and then draw down from it in fear in retirement. I didn't want that. I wanted stable cash flow that would sustain a lifestyle for today and for tomorrow. And the tax side of that, the first time I started investing in it and doing tax planning with my taxes, they're like, you have all these passive losses from all the CapEx, the depreciation, cost eggs, all this stuff. And I'm like, well, how do I use it? They're like, well, you don't have any other passive income. So I ended up with hundreds of thousands of dollars of losses on paper that I couldn't use. So
can't you use it for your active income?
No, not as an LP.
LP.
Right. So when you're in an LP, it's considered passive. And the way the tax, I'm not an investment advisor or a CPA, but as far as I understand it, this is what my teams tell me. The passive side of the equation, the write-offs go with the gains. Same thing with the active. So if you can get a syndicator to put you on the GP side, you can use that against your active income. Yeah. So
interesting. So that was kind of like an epiphany moment where you're like, oh, I have all these tax, I'm going to call them credits, but they're not. They're tax benefits, I should say, but that you couldn't use.
Yeah, so that's when I was not only looking for the next thing I was going to do after the food company, since we were exiting, but I was looking for ways to get high passive income to use all these write-offs. And Kerns Capital was the perfect fit. Cody was starting this hedge fund. I was one of the first investors. Before it even launched, I had my money in. And we trade currency pairings with algorithms, annual traders. We also do swing trading in equities. It's a lot of different trading strategies that add up to a 2 to 4% monthly return target net of all the fees and splits. So we've been exceeding those targets. We've been absolutely just perfect conditions for our strategies. And now I got a lot of passive income that I can use my real estate write-offs for. So that's kind of how that developed. And now every year I'm going to be looking at, okay, what are my gains in the hedge fund? Because they're considered passive. And then if I don't have enough write-offs from real estate, then I'll make that real estate investment in Q4 to make sure that I zero out my hedge fund gains, because it's not always what the returns are. It's how much are we going to keep of those returns. That's the most important part.
That's right. It's just like a lot of times in retirement planning, people want to talk about rate of return, but a lot of times it's like, what's the goal of retirement? It's usually cash flow. And so we have to figure out the metric and then optimize for that metric. And a lot of times the metric in itself is flawed. So I really appreciate your mindset. Is Kerns Capital, are you guys bringing in outside money right now? Or is it is it mainly just your money and people that are close to you?
Yeah. So we launched Fund 1 Last year, the trade started on July 1st, and since then, we've raised from outside investors. We're just over 20 million assets under management at this point, and that's Fund One. We also do SPVs and private equity, special purpose vehicles. We can talk about that too. But Fund One's about to turn 1 year old in about a week.
Lovely. All right. So before we jump into anything specific, if we take it like 5 steps back, what is some of the life lessons you've learned by like 5 years in college, learning to sell, exiting a company, starting to invest? I'm sure you've had a lot of ups and lows along the way. If you had to like reflect on some of the things that you could share to your younger self, knowing what you know now, what would some of those lessons be?
Yeah, the biggest thing I would tell myself is when I first started making money is that it's not time to invest yet. It's the first thing that people want to do when you get your first $5,000 that you don't need to pay bills with, and you're like, well, what am I going to do with it? $5,000, $10,000. Let's be an investor, right? And there's all this propaganda out there from like Acorns, invest the pennies, Robinhood, get a free dollar stock, all this stuff. And the reality is that it's too small. It's not time to be in, if you want to be a real investor in the accredited world, first of all, you got to make $200,000 a year if you're single, 300,000 if you're married, or you don't even have access to real investments. So what I would say is, if I go back to my younger self, reinvest all that money back into myself, my business, my marketing, however I'm going to accelerate my main income stream so that I can get that first 100,000 liquid to go be a real investor. Because that's the minimum on this stuff. If you want to play in the private placement space, $100,000's a min.
Yeah, no, I actually could not agree more. It's funny. A lot of people are talking about your greatest investment being like in your Roth IRA or real estate, and it's so interesting. It's like, if you show me an A player, you show me someone that's maximized their ability and up-leveled their skill sets, they're able to get so many more opportunities, and they're able to make a whole lot more active income because of the value that they're bringing to the marketplace. And so that's I love that you went there. And I also think emergency funds are highly underrated. Like, I think everyone will perform better if you don't have to worry about, 3 to 6 months, even 9 months of money. If like you have that, I've found that people can show up more powerfully or invest in those deals. And a lot of times if people are broke and they're putting all their money into quote unquote investments, then they're always worried and they're not able to say yes to the thing that might take them to the moon.
That's it. Being liquid is extremely important, because when these opportunities come up, like the best opportunity that we're probably going to get this year, we just had, it was a Flexport. It's a $6 billion company, $6 billion in annual revenue, massive behemoth worldwide. There are 116 countries they operate in. We were able to acquire some shares from a distressed fund, 3 weeks to close. That's it. So from the time we heard about it to the time we had to raise the capital, 3 weeks. That means you got to be able to send a wire real quick, right? So, a lot of times, because people they want to invest it, right? They don't want to sit on a lot of cash. Yeah. So the way that I handle that is all of my assets have credit lines on.
Yep.
Right. So it's accessible if I need it, but it's really like a cash equivalent, and I'm not paying any interest unless I need to go deploy it.
It's great. So it's like a HELOC for your investments.
Yeah.
So how do you do your due diligence? Because that's another thing is what I hate is when people are like, just take more risk. It's like, well, the definition of risk is your chance of loss. So how do you've talked about, okay, when you're accredited, you have some advantages, but how do you tell? Because I'll just be very frank. I have a ton of friends who've lost a lot of money who are accredited that got into like special alternative investments that I'm not even going to say they're all Ponzi schemes. I'm just going to say they weren't all what they were cracked up to be. How do you do your due diligence?
Yeah, this is a tough one, because no matter how much due diligence you do, things can still go wrong, right? So, of course, you do your due diligence, make sure everything's compliant, make sure there's PPMs, make sure there's identity verifications, like all of these protocols and processes. When it comes to nefarious stuff, you can spot it pretty quickly. And if you can't, get an attorney to look at it, But then even after all of that, you can still do everything compliantly, and something can go wrong in an investment. So the way that I look at risk is the overall portfolio and how we're allocating, right? So for instance, on my multifamily stuff, I don't put all my money with one operator, right? I spread it out amongst a bunch of operators, even some that I don't like as much as the other ones, because it's about risk mitigation. I don't invest too heavily in one area of the country. I don't invest too heavily in A class, B class, or C class. So it's all about spreading it across the portfolio. So if A class gets hit, which it is right now, pretty hard, I'm seeing my cash flows get compressed in A class, but my C's and B's are doing pretty well, right? Certain areas of the country might be pulling back right now, and then other areas are still booming. So when I aggregate that across the whole portfolio, we're hedging risk. If I lose one of these investments, if I lose two of them, it's not the end of the world, because just as a principle, everybody's got a different number for this, but I'm not putting more than 10% of the net worth in any one thing.
Yeah.
No matter how much I love it. And people, you just can't fall in love with an investment, no matter how great it is. Even my own thing. I want to put a lot more money in Kerns Capital, but I'm not going to violate my principles.
So you have less than 10% of in Kerns Capital
Of net worth, yeah.
So my next question is, if you're in a stage who you've not made it yet and you're in business, do you change your advice and say go all in on yourself or your business so that you hit that level and only then start diversifying when you start having money to invest in other things? Let me know if that question makes sense. And like, what would you say to the person that isn't at your level yet, but like wants to be an investor and knows that they need to go all in on themselves, which looks like going all in on a business?
Yeah, it's such a great question, because it is something that shifts over time. When you don't have a lot of money, you need to take big risks. When you do have a lot of money, you take small risks with a lot of money, right? So yeah, in the beginning, and this is something I see with everybody. I mean, I was like this for a long time. Why am I trying to protect $10,000? If all I have is 10 grand, 100 grand, all in, all in, all in, over and over until you get something that hits. If you lose that money, you really didn't have anything anyways. You get to start over, but you were basically at the beginning anyways. Now, when we get to millions of dollars, then it's a different discussion. But that's my barometer of money, right? Everybody's is different. Guy like Elon Musk makes a couple $100 million off of PayPal, puts all in on the next thing. Like he had a different vision. In his mind, he was like, what's a couple $100 million? It's nothing. I haven't gotten to where I want to get yet, so I'm going to go all in. So you have to just find out what that barometer is for you. And again, stick to the principles, and as it shifts, change that.
I'm sure you've lost money in investments. What has been the theme or the lesson that you've learned in investments when, hindsight's 2020 and you're like, okay, I should have saw that, or this was a good lesson? What's the lesson that you've gained from losing money investing?
Yeah. I mean, you learn something different every time it happens. I would say for me, the biggest thing now is the person. It's the people. It's not even the investment. Like if we're not having fun, if I don't like you, if the vibes are off, anything like that, I don't care how great your investment is, because one of these things, it used to be all about the investment for me in the beginning. Now it's about the operator, the exchange. Do they do what they say they're going to do? Are these reports coming on time? Like, is everything like, I just want ease and a good relationship and someone who works like me with speed, that answers their phone, that answers their emails. Like if I got to track you down for information and I'm your investor, it's just, we're not going to do business. And usually those people are the red flags that are doing something nefarious. So I would judge the character of the people you're getting in bed with over everything.
So I'm definitely going to ask you some health questions, but we're going to transition over to real estate next. And one of the things that we chatted about even before we hit record is a lot of people are talking about real estate from cash flow and appreciation. And what I love about real estate as an asset class is you can use leverage to acquire it. So you don't need to put all your money to acquire an asset, which is incredible. It should appreciate, and a lot of times over time it will grow in value. It will create cash flow, but then there's tax benefits. And what's interesting is what like Robert Kiyosaki is noted for saying, like, don't buy an asset if it doesn't put cash flow back in your pocket. And one of the first things that you said is like, hey, my philosophy when it comes to real estate is I look for the tax benefits. I don't find that a ton of people are talking about this. And so I want to just let you speak to the framework of what you mean by that, and then how someone could really benefit by looking at real estate, not just from a cash flow and net worth, because those both are important, but how they can put the lens of looking at real estate through the lens of tax benefits and how that can improve their portfolio. We talked about it briefly, but I want to just give you the ability to kind of share some of your thoughts and frameworks.
Yeah. So let's start with the foundation of the type of real estate vehicle that you're in. So, a lot of people say, "Oh, I'm invested in real estate," and they buy a REIT on the public markets, right? A real estate investment trust sold publicly is a derivative of the real investment, right? So you're going to get your 4%. You're not going to get any of the tax benefits. You're not getting anything really. You're buying a derivative. It's repackaged on a public market. So if you want these benefits, you're going to have to be on the inside, right? Which is private placement, have to be accredited. But if you can do that and get with these syndicators that are doing commercial real estate, that's where the tax benefits are. So in concept, when as a limited partner, if I invest in a real estate syndication, I own a small percentage of that overall LLC that owns the real estate and the business that's operating that real estate. That's the important thing, right? So if that business spends a bunch of money renovating the units, right? That's CapEx. And then they do cost segregation, which is basically depreciating different parts of the project in the first year individually. You can generate a massive net loss on paper, and don't get that confused with losing money, because that property's still going to cash flow. I'm still getting paid every month, and I'm still going to get the tax benefits. So that's going to flow through to you in the form of a K-1 at the end of the year. And if it's a development deal or a value add deal, that's specifically what I look for, because that's where you're going to get the most depreciation. Sometimes it's 60 to 70% of the initial investment I can write off in year one.
It's pretty incredible, man. And Carlton Dennis on YouTube, I've had him on. He's obsessed about that, and short-term rentals being another strategy that people can use as a tax benefit. And so, is there anything that you'd be wary of someone looking at real estate from the tax side?
Not necessarily from the tax side, but just in general. What you have to understand about syndicators is they raise other people's money and then they go buy the assets, right? So in a time like this where there's very few transactions because rates are really high, sellers don't want to budge on the cost, you kind of got a stalemate. There's a lot of syndicators out there that have raised capital that is not being deployed responsibly. But when they have LPs money and they don't have skin in the game, they need to place it. They need to get it out there. And I think there's a big community of irresponsible operators out there right now that are buying real estate with LP money just because they need to place it. And they probably don't even believe in the property. They don't believe in the investment at all. And they're like, if it works out, we get paid. We get our acquisition fee. And if it doesn't work out, oops, we lost the LP's money. So you just got to be very, very careful. I would ask questions like, how much are you personally investing in this one? I want to be invested with people that have skin in the game. Like if I wasn't personally invested in Kerns Capital, I don't think any of you should invest.
Yeah. I think there's a lot of wisdom there, man. I think there's a lot of wisdom. I know we want to be careful not to give any names, but is there places or people that you would recommend learning more about the syndication space, or is that something that is tough to give on a podcast that's going to be broadcasted all over the place?
I mean, there's a lot of great operators, and I'm very well networked in this space. I was just out at the Multifamily Wealth Conference here in Vegas last month. Met a bunch of new operators. But I mean, if you're someone that's looking for deals with good operators, I mean, I've got 5 to 10 deals that people I know are raising capital for at all times. So. And that's what ends up happening, right? At the end of the year, we're going to have a bunch of partners at Kerns Capital that are going to need tax write-offs. And, the best operators who have the best deals, that's who I'm going to send them to. So
awesome.
Wouldn't be any different for anybody listening to this. If you want to get involved, just shoot me a message and I'll see if I can help you.
Amazing. I appreciate that. Now we're going to transition to the health side, because obviously we were jamming before we hit record, and you're into health as I am as well. So obviously the company that your dad was you were a part of, that you helped exit, was a farm to table company. Do you want to just give us a little context of that, and then also share anything that you're personally doing right now that's helping better your life as it relates to how you live?
Yeah, so we had a farm to table food service, and we would go to, we research the entire country. What are the best farms? What are the practices? I mean, I learned I don't know what's it called, a triple PhD in food sourcing. I mean, I know everything you need to look for, from how pastures are rotated to the breeds of the animals to what they're eating to how they're processed, how they're packaged. I mean, microplastics, for instance, just a major problem, right? Like if you're buying organic food that's wrapped in microplastics and you're eating that, it's just, not, you're not doing yourself any favors. So we did little things like our packaging was BPA free. It was also didn't have any phthalates, which are directly linked to infertility. Tons of issues that we're having now. And BPA is synthetic estrogen. That's what bisphenol A is. So all these microplastics that we're ingesting, I mean, it's not a surprise to me that we're having mass hormone problems across the population. And this stuff's in our water, right? We got one water supply on this planet. And when you've got commercial agriculture spraying glyphosate and all these pesticides all over your food, most people say, well, I'm not getting exposed to that because I'm eating organic food. But the reality is all that's going into the aquifer. It's going up in the rain cycle, turns into bioaerosols. And the most dangerous thing is the water. Because when those chemicals come into your house and they go through the hot water heater, it turns your shower into a gas chamber of chemicals. And I have a theory on this, can't prove it, but I've always wondered why smoking is plummeting. People don't smoke cigarettes like they used to. Why is lung cancer increasing? And I think it's our exposure to environmental toxins and the crap we're breathing in on a daily basis.
So we could have a whole podcast on water, believe it or not, because the reason why we jam and is I'm very aligned in how you think. What do you do for water, the water solution? Do you have like a filter, or what would you recommend? Because we filter our water. I'm the nerd that brings a water filter to the airport and filters everything before I drink it. So I'm with you, by the way. So tell me, like, what's your water hack 101?
Yeah. So the first principle here is you're never going to escape environmental toxins, right? So this is about reducing the overall toxic load from all angles, right? If you eat clean, you got clean water, clean air, we're reducing toxic load, right? Same thing with, not drinking too much alcohol, all this stuff, right? It all adds up. And when you get DNA damage from too much toxic load, that's what cancer is, right? So it's about really avoiding DNA damage. And the first line of defense is a whole house water system. And when you go down this water rabbit hole, it can get crazy. You could spend $30,000 on a whole house water system. You don't need to do that. Remember, we're trying to reduce toxic load. So a basic carbon filtration system that goes point of entry when it comes into your house, they're anywhere from $2,500 to $5,000 on the quality. And that's going to remove 99% of all the crap that can kill you coming into the house. So to me, that's step one, because your skin's your biggest organ. That's actually how you absorb most of the environmental toxins. So if you've got an under-counter system or a filter on your fridge and you're drinking clean water and you feel safe, that's a small percentage of it. You need your whole house filter. Now, if you're in an apartment, it's a different strategy, right? You can't put a whole house water system on an apartment. But what you can do is do shower head filters and point of use filters, right? The shower filter to me is the most, that's the most important one, is what you're showering in. You can't have those heated chemicals and toxins coming into your shower.
And what I'll do is I will put the shower filters that I use just in the link below. I think it's an Amazon thing. And then if you want to send me any links from a standpoint of what you use for a whole house filter system, I'm with you. If it's 2 to 5 to 10K, again, think about this. You could put that money in and you could get compound interest and all those things, or you could make sure that you're building a foundation of health so that you can show up powerfully and actually enjoy the money that you're making long term. And it's so funny that you said water, because I've probably been telling all my friends last 1 to 2 years, we have a water problem, and it's in the United States. Like, we're going overseas and helping people drill and get water, and that's awesome. But like, I don't think people know how bad it is in the United States. And I don't know, there's probably some business opportunities there.
Well, yeah, I mean, full disclosure, I do have an environmental toxin company that I'm not active in, but it was a branch off of Heartland Foods. So we did sell a full suite of commercial grade air purification, water purification, all of it. And so I know a lot about that too. KDF and NSF certifications, what's garbage at Home Depot and what actually filters your stuff. But where I would start, just so everyone can be aware, if you just send me a DM with your zip code, I'll send you the water report for where you live, and you can see the what's in your water and the concentrations of it. And then, you know, at that point, if you don't take action, I mean, you're just asking for it.
All right. We'll definitely have a way for people to connect with you, and I think I have access to the same report you do. And yeah, it's pretty terrifying when you start bringing someone's zip code up, and you're like, yikes. Yeah, lots more to talk about there. What are the things I sometimes am more passionate about the health side than the money side. What are the things that is relevant in your world that would really benefit our audience as relates to living more intentionally, wealth efficiency, real estate, health? Like, what are the things that you're having conversations that people are leaning in on?
Yeah, I mean, health is first. I mean, when I was doing health coaching for a while, if I could just get people to walk 30 minutes a day, I mean, that's the most life-changing thing. Like, if you want to lose weight, yeah, you got to eat right. You got to do all these things, but the general just movement is the most underrated thing out there. If you can just go walk 2 to 3 miles a day, you'll be infinitely healthier, right? The body needs to move. So I would say definitely do that and prioritize it, right? Like, even when I didn't have money, I mean, the one thing that I never skimped on was taking care of my health. Like, yes, I got an expensive gym membership, even if I had to put it on a credit card, because it's the foundation. You know, if you're not working on yourself personally, like, you have to be wealthy inside before you're ever going to be wealthy monetarily. So I didn't look at that as like I'm wasting money when the organic stakes twice as much as the other one. It wasn't a waste of money. It was an investment to me. And that served me very well. So look at investing, not just I give money and I get money back. It's where can I put value to get value back?
I love that. Any books that you've read more than once, or that you would have on your top list from a standpoint of definitely read these, or these have impacted my life?
Yeah, it's interesting. I've been taking a break. I used to be incredibly obsessed with books, reading a couple a month for a decade. And then I got to this point where it was like, you know what? I think I'm done learning. I need to execute, right? So there's different phases. Don't become too obsessed with learning. You got to take action at times. So it's different seasons of your life where you're looking for answers. But once you get that answer, you got to go. But yeah, I mean, the Rich Dad series was the foundation for me. Rich Dad, Poor Dad. Then it was Cash Flow Quadrant. Then it was Rich Dad's Guide to Investing. Then Rich Dad's Guide to Real Estate. Like, when I find something I like, it's all in. Probably listen to those audiobooks 10 times each, over and over and over. Every book that Grant Cardone wrote. I mean, that's what built my sales career. I mean, those stick out to me. The Lifestyle Investor, one of my favorite books. That's what got me to stop thinking about growing and saving money and started investing for cash flow.
Justin Donald's a good friend, so I'm glad that that's a book that you're a fan of.
That changed everything for me, because what I realized was that when you have cash flow that hits every month, whether you work or not, that's when fear goes away. That's when you actually sleep well, right? Mm-hmm. Having a lot of money sitting in a bank account or in a 401k doesn't take any pressure off of you. Zero. Mm-hmm. You still got to go to work tomorrow to get that active income, or you're screwed, right? So investing for cash flow that pays you today and is never going to go away, that's where you can really find peace and freedom financially.
I love that, man. Well, I'm just going to transition to how I end the show. If this was your last day on Earth and you were with the people that you love the most, and you couldn't give them any cash flow, any water filters, any books, any movies, you just had one last conversation with them, what would you say?
Man, you're stumping me on this one. That's a good one. I mean, I would just say be unapologetically you, and what other people do has nothing to do with you and your happiness. And just because I have this, you know, I'm built with this crazy dopamine system that all high achiever entrepreneur people are. If that's not you, that's okay. You know, like, you got to do what's going to make you happy. And, you know, people like us that are hard charge entrepreneurs, it's the hardest type of personality to achieve happiness, just because you've always got to be moving towards the next thing, and you never really get that contentness. So if you can just find that, it's a beautiful thing. I envy people who are just happy being as is.
Yeah. Contentment, I think there's a reason the Bible talks a lot about it. It's one of the most magical things that you can have, and you can't rid someone of something if they're truly content with their self and their identity. Like, you can't be bought. And I think there's something really powerful about that. How can people find you? I'm sure there's a ton of people that want to hear more about you, start following what you're up to. Obviously, you're on Instagram. Where are other platforms or areas that people can stay connected?
Yeah, we're on all the social medias. So it's Justin Freishtat. And website is toptierhuman.com. That's my personal website. And then Kerns Capital, that website is kerns.capital. There's no .com on the back of that. So just kerns.capital.
Amazing. Well, Justin, thank you for the work that you're doing. Thank you for coming on and just getting us to think differently and just being you. And thank you ultimately for sharing just some of the most deepest parts of what was made you tick. We really appreciate it.
My pleasure. It's wonderful to be here.